S&P 500 or FTSE 100, where should you invest your money? If you're in the UK and wondering whether to go for the US stock market or stick with the UK's biggest companies, this video is for you. I'll break down their historical returns, risks, some beginners' mistakes, and how you can start investing with just £100. Let's dive in. Before we compare, let's quickly define these two major stock market indices. The S&P 500 represents the 500 largest companies in the US, including Apple, Microsoft, and Amazon, Tesla. Accounts for about 80% of the total US stock market value. It's considered a great benchmark for the US economy. The FTSE tracks the 100 biggest companies on the London Stock Exchange, including Shell, BP, and HSBC. Represents around 81% of the UK's total stock market value. It's the UK's flagship index. Now, let's compare their historical performance. When it comes to performance, the S&P 500 has been a clear winner over the long term. Let's look at the numbers. S&P 500, average annual return. Last 50 years, approximately 10% per year. Last 20 years, approximately 8% per year. Last 10 years, approximately 12% per year. FTSE 100, average annual return. Last 50 years, approximately 6 to 7% per year. Last 20 years, approximately 4 to 5% per year. Last 10 years, approximately 4% per year. So, if you had invested £1,000 in 1990, S&P 500 would now be worth around £17,500. FTSE 100 would now be worth around £7,600. Why does the S&P 500 perform better? It's because the US market is home to the world's biggest growth companies, whereas the FTSE 100 is dominated by older, slower-growing industries like oil, banking, and mining. But there's one advantage the FTSE 100 has: dividends. The FTSE 100 offers a higher dividend yield, around 3.5 to 4% per year, compared to the S&P 500's 1.5 to 2%. If you're looking for passive income, the FTSE 100 provides higher dividend payouts, which can be reinvested to boost long-term returns. That means if you prefer steady income from your investments, the FTSE 100 might be appealing. But if you're after long-term growth, the S&P 500 has historically been the better choice. Now, let's talk about how you can start investing in these funds with just £100. Step 1. Choose a platform. Trading 212. Offers zero-commission investing Vanguard. Is great for index funds and long-term investors. Free trade. Is beginner-friendly and offers fractional shares. Step 2. Deposit your money. Transfer £100 to your chosen platform. Step 3. Pick your fund, ETF. For S&P 500 Vanguard, S&P 500 ETF, VUSA, iShares. Core S&P 500 ETF, CSP1. For FTSE 100 iShares, FTSE 100 ETF, ISF. Vanguard, FTSE 100 ETF, VUKE. Step 4. Buy and hold for the long term. Investing is not about timing the market, but time in the market. Now let's discuss some common beginner mistakes. Mistake 1. Panic selling. During market drops, markets go up and down, but selling at a loss locks in losses. Mistake 2. Not diversifying. Consider investing in both the S&P 500 and FTSE 100 for balance. Mistake 3. Checking your portfolio. Too often, investing is a long-term game. Don't let short-term fluctuations scare you. So which one should you invest in? Here's a simple breakdown. If you want higher long-term growth, the S&P 500 is the better choice. If you prefer dividends and stability, the FTSE 100 might be right for you. Many investors actually invest in both to balance growth and income. Now it's your turn. Which one do you prefer, the S&P 500 or the FTSE 100? Let me know in the comments. And if you found this video helpful, don't forget to like, subscribe, and turn on notifications for more investing tips. See you in the next one.